guys, it's Doc's Market Minute for September 21st. We are getting into fall now. And the word of the day is context. What does context mean? Well, it makes more sense when we're looking at multiple time frames here, because the context is that we are in a weekly downtrend. We're still making lower highs and lower lows. And so we should expect that to continue until such time that we see a higher low and or a higher high show up on the weekly chart. Now, we'll see that start from the smaller time frames first. But so far, looking at the daily chart here, all we have is this little bear flag pattern, or rising wedge, whatever you want to call it. And what we have to watch for is the break of this lower trend line. A break of this lower trend line. Typically, when these things break, if it does break, we will see it happen in the pre-markets, and the professionals or those from Europe or the pack rim will get a big jump on this thing if we have futures way down on this. This is typically what we call a professional gap. So the trend is not really broken yet on the daily chart. So if we do see a bounce up here, we're going to watch to see whether or not it can get above 2020. If it can't, then that's setting up a lower high, and then we could have a pretty wicked move down from here. So be cautious of this right now. The context is such that the weekly chart is in a downtrend, and so we should expect to see this set up a lower high and then roll over. If it doesn't happen, we could just as easily see this start to make new highs, right? Higher highs and higher lows. There's no law that says that this has to roll over. However, the context is such that I would expect the high probability move would be to at least retest that low coming up sometime in the next couple of weeks. That's it for today's Market Minute. Thanks for listening, folks. We'll see you tomorrow.